Most Aussies will retire with less than 300,000 in super, and it won't be enough. But here's what no one tells you. Just two well-bought investment properties could build you over 3.8 million in future wealth. Not with luck, not with hustle culture, just pure math, compounding, and a smarter plan. Let's unpack the numbers most people never see. Wages in Australia haven't grown in real terms since 2021. Meanwhile, the cost of living has exploded. Groceries, rent, fuel, everything. The pension maxes out around $45,000 per year for couples. But if you're a couple who owns and lives in your home, and your combined assets, excluding your home, are over $1,059,000, you won't be able to get that age pension. And most people's super? Gone by age of 91. If they don't invest it further, live longer than that, you run out of money. It's that simple. So let's run the numbers. So let's say you're 35, earning $120,000, you're a couple, and you have a balance of $40,000 in your super. So let's say your partner is same age, earning the same as $120,000, $40,000 in super. By the age of 65, since you're 35 now, you have $1.3 million in super. Sounds good, right? Until you realize you're out of money when you reach the age of 91 or 92 and above. That's why relying on this alone is not really a good place to be in. It's nice that we have this, but if we can do more, then why not? And the thing is, I want to live more than 91. Who don't want to be? Now, with the age of modern medicine, we can live longer. Well, for me, retirement isn't about quitting work. For me, it's about buying back your time. If you had 100,000 a year in passive income, would you wait until 67? You can always make more money, but you can't make more time. But here's the part what most people miss. You buy two investment properties for 500,000 each, and that's a total of 1 million. Let me show you the numbers. So let's say we're buying two investment properties for 500,000 each, which is a total of 1 million. So let's say for total 1 million. Assuming that the compounded growth rate is 7% per year, that's 7% per year, that would be 7.6 million in 30 years' time. If we adjust for inflation for today's dollars, that would be 3.8 million. And if you sell them at retirement and earn 4% annual returns, that's 152,000 per year in passive income without touching the principal. Most people think just work hard, save super, and hope for the best. But that version of retirement, it's already out of reach for a lot of Australians. You don't build wealth by saving harder. You build it by owning assets that grow while you sleep. Instead of asking, can I afford to invest? Start asking, what happens if I don't? Don't think like the middle class. Think like long-term investors with 10 to 20-year horizons, not weekend plans. This is how wealth is actually built. Here's our simple strategy and action plan. First, find out your borrowing power. Second, use data to short these suburbs with cash flow and growth upside. 3, don't wait for the perfect time. 4, build a two-property base and let the time do heavy lifting. You don't need 10 properties, you just need 2 that compound over time. If this changed how you think about retirement, please hit that subscribe button. Every week, I break down data-backed decisions and strategies to help you build real wealth, not just to follow outdated advice. And if you want to start owning assets that grow while you sleep, check out this video right here, where I break down how smart investors reverse engineer their property strategy. Again, this is Gilbert Melgar. See you next time.